All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market was fairly balanced, where on the downside we got buyers at support, and on the upside, the 86.5 resistance attracted sellers, and basically the overnight session was very balanced and two-sided. Now heading into the open, we have the consumer confidence number out at 9 a.m. Central, and then the FOMC meeting begins today, and the FOMC announcement is scheduled for tomorrow. So the market could be waiting on the Fed announcement as well. So given the large downside move and the fact that ES has stabilized and is starting to balance, and when you take the Fed announcement into account, it's more likely that the S&P will continue balancing, and the other markets will also continue being range bound, and any pushes outside of the range can attract buyers and sellers, right? So any pushes on the downside, tests of the bottom of the balance, which is basically yesterday's low, or 68 quarter, 69.5 to 71.5. Those support areas can attract buyers, and especially if we actually break outside of yesterday's range, then that can attract responsive buyers if it's on a downside break. And on the upside, it's the same idea, right? We're short-term bearish. The bias is basically bearish to neutral now because the markets have stabilized. So any pushes towards the top of the balance, the 86.5 to 88.5, 91, 92, or outside of that range, can attract responsive sellers. And the market basically just kind of remains more or less range bound. It doesn't really go anywhere. It's more of a day trader's market where I'm not expecting big buyers or big sellers to be making big directional pushes outside of yesterday's range. So that also means that the middle of the range can be a bit choppy and not really the best spot to be initiating trades, because right now, from the middle, it can move lower, test the bottom, come back up, or it can kind of stabilize here, go up, find sellers, come back down. So the middle area can be, very choppy, and that's the area that you generally want to avoid. And you want to avoid taking a lot of continuation setups in this kind of environment. So, the theme for today is going to be extra selective and, just be patient for overextensions. If you can't get on board, the start of the move, then, it's risky to enter kind of in the middle of a move because it can quite easily just, reverse, chop around, balance a bit, and then go. So, either you're on board early and you're near the top of a swing, right? Like, for example, if you wanted to short, then, that 85, 86 area overnight was a good spot. If you wanted to buy, that first test of pre-market support was a good spot. But if you miss those inflection point entries, then I think hopping on board a bit late just adds a lot more risk in this kind of environment. When the markets are directional, that's when you want to take continuation setups, and they generally work because the markets are directional and there's still a lot more room to go. And even if you hop on board a little late, that's okay because it may seem late in real time, but then you look at it 2 hours later and you have great trade location and it was actually a great spot to get in. I don't think that's going to be the case today. So on my end, I'm thinking I'm only going to have maybe 2 trades on the day time frame today, and I'm going to be very picky, very selective on the trades I am going to take, and majority of the stuff I'm just going to kind of let it go, and focus more on just preserving capital rather than putting on risk at multiple spots, trying to scalp here and there. I mean, that's not our style anyway. So we're just going to be focused on trying to find the big reward to risk spots, the big inflection points where the other side is kind of forced almost to take action, and that's going to be towards the bottom of the range or towards the top of the range, and then the middle is going to be lower probability, lower odds, high probability of chop, all that stuff. So That's really the theme of the day heading into the FOMC announcement, and even all day today. So that's really the theme. That's going to be the focus. Um, as far as bias goes, again, right now we're just stuck in balance, but we are coming off of a pretty big down move. So the short-term bias is bearish to neutral, unless we push really deep into the support zones, and then you saw yesterday we got pretty strong bounce because we were coming off of such an oversold condition, and that type of action can play out even today if you push deeper into the zones like the 64, 66, or especially the 60 to 62 half. That's a very key spot in the market. On the upside, 86 half to 88 half is a good spot. 91, 92 is top of the balance. And then if we go outside of that range, then those resistance zones above can certainly attract sellers in this market for a push back down into the current range that we're in. So if we push outside of 91, 92, then we can expect to move back down towards 86 half to 88 half. Pretty high odds of that happening. If you're watching the other markets, NQ holding above the 34.79 to 80 area would confirm this idea of balance, and that would put in a positive divergence. If you're watching TF, holding above the 24 to 25 area would be a good sign that the markets are stabilizing. If 24 breaks, then on the downside, that 15 to 17 half area is a good spot for support on the Russell on TF, so we'll be watching that as well. Internals, expecting them to be fairly balanced overall. Unless to go extreme one side or the other, I don't think there's going to be too much to read into that. So that's how the day's shaping up. Let's see how we open, and we'll take it from there.